Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Hi there and welcome to the ISC FX Options Weekly Outlook for April 5th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a quick look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. Well, after testing the 82.5 focal zone, the US dollar index spent last week looking for support within the 80.5 to 81 focal zone. Although closing the week in the red, the dollar index closed significantly off the lows, with the trend in force continuing to be up. An extended move higher targets the 84.85 box. Now, a quick look at a daily snapshot of the index reflects the important role that the 80.5-81 focal zone plays as support. If this level holds, an extended move higher should test 84. Let's take a look at how the US dollar has been trading against the Canadian dollar as seen here in the ISC FX Options Pair Value CDD. Well, after failing to hold the 102 level as suggested last week, the pair value migrated back down to test support within the 100.5 to 101 focal zone. Now, this level does maintain an important role as support, and should we see the pair value consolidate here, a bounce off of this support level should test once again this 102 to 102.5 focal zone as resistance. Until we see the pair value break above that level, the path of least resistance continues to be to the downside. Failure to hold the 100.5 to 101 focal zone is likely to yield a test of 100 or a US dollar Canadian dollar par. Well, the US dollar continues to trade higher against the yen as seen here in the YUK. We were looking at the 92.5, 93 focal zone as an important resistance level. However, the pair value broke through that last week, opening the window for a possible test of the 94.5, 95 focal zone as the next upside target. At this point, however, after such a significant move, it would not be unrealistic to expect some sort of a retracement back down to test 92.5, 93. Now, failure to hold support at that level opens the window for a deeper retracement back down into this 91.5, 92 focal zone. Well, the US dollar lost some ground against the euro as seen here in the EUI, sliding back to test support within that 73.5, 74 focal zone. Now, this level does represent a very important support level for the pair value, not only from a previous resistance level, but also from a measured retracement perspective. At this point, a bounce here is likely to retest resistance up at that 74.5, 75 focal zone with an extended move to having us target the 76.5 box. Now, if 73.5, 74 does not hold as support, we would look at the next logical level of support being the 72.5, 73 focal zone. Well, we were looking at a possible continuation to the upside for the US dollar against the pound. However, very early on in the week, we saw the pair value reverse to come back down to test support within that 65, 65.5 focal zone. Now, at this point, support here and a subsequent bounce is likely to retest what has now become a very important resistance level up at that 67, 67.5 focal zone. We cannot overlook the formation here of what appears to be a double top, and a break below 65 is likely to yield a drop all the way back down to find support within the 63.5, 64 box. Well, the US dollar lost some ground against the Australian dollar as seen here in the AUX. We anticipated that a break above 110 was likely to signal an extended move higher. However, as the trading week opened up last week, the pair value quickly rejected and headed back down to test support within this 108.5 to 109 focal zone. Now, at this point, support here lends credibility to a possible bounce and retest of 110 to 110.5. However, until the pair value actually breaks and holds above this level, the path of least resistance continues to be to the downside, which will be signaled by a break below 108.5. Let's take a look at a few of our key points. First of all, the U.S. dollar retraced as anticipated. However, the uptrend remains intact. A break below 80.5 lends credibility to a more significant U.S. dollar pullback. The CDD could not hold 102 and as a result pulled back to test the upper range of our 100-101 focal zone. Failure to find support here is likely to yield a test of 100 or U.S. dollar Canadian dollar par. The YUK continues to push higher. We suspect the retracement down to test support at 92.5, 93. An extended move higher is likely to meet with some resistance at the 94.5, 95 focal zone. The EUI has pulled back to test support at 73.5, 74. Support at this level lends credibility to an extended move higher targeting 76. The BPX completely reversed and appears to be forming a double top. Support at 65 is crucial in maintaining upward momentum. A break below 65 may signal further U.S. dollar weakness, leading to a test of 63.5 to 64. The AUX continued to slide lower, failing to hold last week's levels. The pair needs to find support at 108-109 level. Failure to do so will likely lead to an extended move lower. And this has been your ISE FX Options Weekly Outlook for April 5th, 2010. As always, this is Jason Ayres of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.